Canadian dollar down mildly, 0.13%. Adam Button is joining us. He's the chief currency analyst at Forex Live from Ontario, joining us via Skype, I believe. Good to be with you. Thanks for joining us. Good to be with you. And I'm curious in terms of the reaction you've been seeing in the Canadian dollar when we heard President Trump's comments yesterday.
Right, it was a scary moment as those headlines from Trump begin to cross, and it was late in the day yesterday. We saw a heavy sell-off in the Canadian dollar, and then it kind of ticked back here today as the market says, well, once again, this is just Trump talk. Will it be followed by action?
What do you think when you take a look at what's going on in the foreign exchange market? So many of these stories do actually get played out in currencies, and often the currencies are right. What do you think is going to be the right move? What are you seeing in the flows?
Right, it's this game of chicken right now where Trump is threatening to do something, and we thought maybe Canada would fold or the U.S. would fold, and neither side is doing that right now. But what Canada, I think, is saying is that Congress won't allow this to happen, or the public won't allow it to happen, or Republican donors won't allow it to happen. So the market is taking all these comments and believing the same thing. So you've gone from maybe a 95% chance of a deal down to about a 90% chance of a deal. And, the market really is just waiting for somebody to actually make a move and then find out if Congress is willing to stand up for NAFTA. What
are you seeing then right now in terms of the right level for the Canadian dollar?
Yeah, the Canadian dollar has gotten very comfortable around this 130 level, or about 77, 78 cents, looking at it the other way. And I think, even the broader economy has grown more comfortable with this level of uncertainty about NAFTA and starting to say, you know what, we can just move on. And there's a lot of talk, and I know there's been a lot of talk this week about a 10% fall in the Canadian dollar or whatever it is. But there isn't a lot of talk about some of the upside risks from trade. If NAFTA gets done, the commodity market is looking a lot stronger, and a U.S.-China trade fight could be really good for Canada in the long term.
How so?
Well, we don't talk about this often, but if the U.S. and China aren't trading with each other or aren't trading with each other as much, they're going to be trading both more with Canada. So if you're a Canadian exporter, now your Chinese competitor, as of this week, is facing a 10% hit on their margin, and you can come in and take some of their market share. I think it's a tremendous opportunity for some of these Canadian exporters. So we have $200 billion of Chinese annual exports getting hit with tariffs. Of those, Canada exports about $178 billion currently in those exact same fields, in those same categories. So Canada can move into that, can expand capacity. And if this is a long-term trade war with China, which I think it might be, then Canada can take a little bit of short-term pain now, maybe take a worse NAFTA deal, and eventually start to take that market share away from China and export more to the U.S., and ultimately Canada wins.
What are you seeing then, or what are you essentially recommending as a smart trade as it relates to the Canadian dollar?
Right. I think in the very short term, I think tomorrow there could be some headwinds. The U.S. will announce tomorrow that it's moving ahead with Mexico. There might be a little bit more bluster. You probably see the Canadian dollar weaken off, maybe a half cent again. But over the long term, over the next 8 months to a year, the Canadian dollar is going to have a constant tailwind as NAFTA gets better, as it gets done, as Congress checks Trump. And I think you can get up above 80 cents easily, up to 83, 84 cents in the year ahead.
So does that mean you would be out there buying the Canadian dollar at these levels?
I think you have to be picky. There's this ebb and flow in the NAFTA deal, and it's probably going to get worse before it gets better. So you might get to see some better Canadian dollar levels in the next month or two ahead. But that said, the Bank of Canada is going to be a tailwind. They're going to hike next month, and they'll probably hike again in January. And the markets only price that in about halfway. So the rest will come in, and the Bank of Canada is going to be a tailwind.
Why are you so confident that the Bank of Canada will raise rates?
I think when they look at NAFTA, I mean, if you look at NAFTA as this, or trade in general, it's this big boogeyman, right? And all this fear about tariffs all year, even since Trump was elected. And now we had Trump put on tariffs against China, heavy tariffs, and China's announced retaliation. And here are markets doing just fine. The real economy doesn't seem to be squeezed at all. So we have seen this boogeyman now. And I think the Bank of Canada has kind of seen that as well. And all along they've been hinting, well, this probably isn't going to be as big of a deal as the fears. And I think now, even if things deteriorate a little bit over the next month, they're still going to hike. And their last meeting, they talked about accelerating the pace. They're not going to go from saying that to taking their foot off the gas pedal altogether. And I think it's just this headline risk we see again and again, and this fear with Trump that's keeping a lid on the Canadian dollar.